Hello traders, Gary Wagner with the Gold Forecast. It is Friday. What a Friday it is. November the 12th, and this is the daily report. Incredible pressure right now in the gold market. We have gold trading down roughly $32 right now at 1376, 1377, right in that area. Fundamentally, there was an announcement by China that they would have an interest rate hike. That interest rate hike, of course, is going to make borrowing of money in China much more difficult. It will stem their concern for inflation, but it also keeps the Chinese from buying gold. It caused major tumbles across the board in commodities. Commodities worldwide are sliding due to this. Now, I was very, very comfortable last night when I actually saw this market selling off, because what I noticed is that as it went to this 38% retracement level, and this Fibonacci, this is my deep Fibonacci here, this runs the entire gamut, and then of course your retracement levels right here is 38%. We've got one nice bottom right in here. And so when the market continued and through the trading session, it actually found some support right here. My sentiment was that we found some really good support, and I was actually very, very comfortable with that. This last break, though, has been drastic because it has broken through a couple of channels. On today's report, I'm going to talk to you about potential points for it to retrace, where I think it will find some ground. My obvious concern is the fact that it did break through this double bottom in terms of straight Fibonacci 1372. This is 61% of the shorter wave. So this is a 61% retracement right in here of just that wave 3. And so I would look tentatively as this to be a bottom of the market. But we'll cover that on today's report. Traders, as we speak, this market is selling off, and it's selling off harder. This double bottom right in here has been broken. Again, we had a huge piece of fundamental news. This is that knee-jerk reaction to it. I have sent out an email. In that email, I'm recommending that traders trail their stops to 1365 as a precautionary measure. It has broken through what I consider to be all reasonable levels of support right here, and I don't really want to get caught in a parabolic meltdown. I don't think one will occur, but even at 1365, the risk factor that we had is just over $35. I would rather take a profit, but I certainly want to curtail our loss to that monetary amount, $35, $40 on the trade. Traders, this is that same chart, a 60-minute candlestick chart. And as you can see, it right now is trading, as I said, even below some lows that I really thought it should have some strength. When I consider these bottom areas right in here, this was that major double bottom that I was talking about. And as you can see, it did appear as though it tentatively found a bottom. It moved back up off of that, but then absolutely broke hard to the downside. I also want to look at our other daily chart. This is the one in which we have been looking at over the last couple of weeks. This is with the Fibonacci extensions. Again, on the right-hand side, these extensions are of wave 1. This is 100% of wave 1 starting at the bottom of this fourth wave right in here. And the top on that, which was my first prediction as to the end of this wave, was right around 1422. It has me questioning whether or not that was a top of sorts. Obviously, with the market down here, that was a very, very strong point in terms of having resistance. Now, if we take a Fibonacci extension of wave 3, that is the longer of the two waves, that's from here to here, what you can see is the extension that I've got up here in dark black. This is that 38% level of that retracement. You can see the market right at that point right here. Now, does that mean that it should hold? Well, that's why I'm saying these are critical points, and that's why my sentiment is if it starts to break through this area, really what we're looking at is 1355 is the next level that I would find support. So that I would hope that it holds here. I know that our stop is tight, but it has broken through some pretty critical areas, and it did bounce off what we were looking at as really a strong potential area for resistance. As I said, traders, I absolutely believe that we are in a pretty precarious position right now in terms of the direction of gold, just really short term. Long term, I'm still absolutely bullish on the market. I still think that those fundamentals are intact. I absolutely believe that traders have been looking and waiting for a reason to sell this market down hard, to shake up the tree, to shake out the multitude of longs that are in there that are what I'll call weekend warriors or speculators that are not very seasoned. Even a seasoned veteran is going to have difficulty as you look at this kind of a day here. The other thing that I have to note at this point is originally when I was looking at that 1421 and it did come off of that, that at least at this point does appear to be the correct call. In other words, we did make the correct call. We just thought that it would be basically a zigzag, meaning it would have a series of subwaves in there and then pop back up. The critical thing right now, as far as I'm concerned, is the fact that it is falling through all of these areas. It's getting close to our 65 stop. I really wouldn't be surprised at this point if it does get hit. We have had, I think, 5 really profitable trades. This trade does not appear as though it's going to end up profitably. Overall, we're still very profitable, but with this kind of scenario, we've got to be able to simply raise the stop, take a risk that's acceptable, take a loss that's acceptable, and move on. Tomorrow is another day. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you on Sunday for the Daily Review. Bye-bye.